Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Thursday market webcast. Okay, daily chart, and both sides have had a look at either end of this consolidation range when you widen it out. So, a couple days up around 29.65. We took it down as low as 27.71, then back up, and we go do that 47, pushing back down towards the bottom end of the range. We've done as low as 27.86. So you got 71 here, you got 86. If the bears want to expand the range, plain and simple, you take out 71 and you engage the band. Where's the band? Well, at the moment it's about 27.41. If they can do that, they can open it up to some more downside pricing. I think at that point, you really have to look really long and hard at 27.17, which was critical. Earlier, back in April, you did 27.11, you had 27.01, and then you really had a couple of deep moves down here into the low 2600. That might end up being a bridge too far, but there's certainly enough consolidation in this tape to open up to whoever wins the expansion battle. Okay, whoever wins the expansion battle is going to get 3, 4, 5 days of really solid directional pricing. And if you say to yourself, well, you want to retrace half this move from 21.74 to 29.65, then things like 26.20 are in play. I don't like targets. I don't like big upside targets or downside targets. I think they're for show. I think they're, a target. Here's my 30-second rant on targets. Targets accomplish typically one of a couple of things. They either get you out of trades that you should be staying in and getting more profit, okay? So say you're short 2,800 and your target is 2,700. So it goes down to 2,700, you high-five yourself, you take your victory there at 2,700, you drop the mic, and after you're done, singing your praises on whatever social media platform works for you, you turn around and all of a sudden it's trading at 26.70. Now it's 26.60, 26.50. Well, why did you get out in the first place? Aside from your target that either because you read Barron's on Sunday or you stayed at a Holiday Inn Express, it was just, it was a number. Maybe it was a number on your stuff, but what's so special about your stuff? So targets will get you out of trades that you should continue to let be profitable sometimes, okay? And then the flip side of that whole deal is what most people will do at that point is they'll get in the other direction. Why? Well, my target was hit. We're done going down. We're going in the other direction. Oh, okay. How does that usually go? We've all done that as a trader. So that's downside targets. That's the one that's the one thing a target can do. It'll get you out of stuff you need to stay in. Here's the other one. So short 2,800, your target's 2,700. Okay, trades to 27.20. Big move. Lot of handles in that move. You take some profit. You have a runner. I have a 2,700 target. Okay, that's nice. Would you like fries with that? 27.20, 27.30, 27.50. You end up burning up a runner because you had a target that obviously price didn't agree with, which is all that matters. And it ate away at how much of your runner, and sometimes if you really get egocentric, all of your runner, because you had a target down below and god damn it, price didn't hit it. So not only did you stay in a trade that you didn't need to stay in because you had a target, well, now you have missed out on the opportunity of the other side. So I didn't really think when I turned this thing on it was going to turn into a little 3-minute webinar on targets. There it is. All right, back to the tape. So hourly chart, we're hanging around under the 50. It's starting to respect the hourly midband as resistance. It broke down nicely from the weekly pivot yesterday. The bears very much need a lower low. They need to take out yesterday's low at 27.86. They need to push down towards that 27.40 area. And If it can do that, then and they engage the band, then they have at least the opportunity to expand the Bollinger Bands and get a little bit more directional pricing down below. One piece of news could change all that. So for now, what you got to be focused on is hourly mid. Does it want to continue to be resistance, he tried to say, and can it make a lower low? That's the key. So you've got volume weighted average price, Madonna, and the hourly mid band all sitting at 28.08 right now, between 28.08, 28.09, that whole area. 5-minute bids at 04. So we were short a little bit last night. We did fine. We're flat now. Got stopped out overnight. So we're just hanging out and waiting. Probably wait for 9:30 and kind of go from there. I'll be very interested to see how that 28.08 area reacts if it's retested. Ideally for the bears, they shouldn't really let it back up above the roundy. If we start to ping pong between, say, 27.90 and 28.10, centered on 2800, then you could have a period of some serious chop today. It's come off from 29.47 down into the high 2700s. It's not it's not beyond chopping. Now, that said, you look at this, we kind of already are, right? We're kind of consolidating down here. So if it's ready to vote down from this chop area, then we could have a pretty directional day, but there's no way I can really read that right now. So I'm just going to sit back and wait and see, and we'll take it one handle at a time. All right, everybody have a great day. Be healthy, be safe, take care, trade them well. I'll talk to you soon. Follow us over on Twitter, Instagram, and Snapchat at Princetontrader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade them well.